Hi, everyone. Unfortunately, you're going to be disappointed. There's no time for jokes tonight. I hope I not only have the charter members here tonight, I hope I have a whole bunch of chart curious people, should we say, trading curious people. Hi, everyone. Let's get going. I had the choice as I went through this. Sometimes, I do these, and I think most of them are good presentations. I let you know once in a while. I tell you, hey, I think this is a boring one. And sometimes as I go through, I just can't stop the faucet of things that I want to say and information. And I think this is perhaps maybe the best ever, in my view. My view is not always your view, but there was just so much information, and I either had to make it into two presentations or hurry through it, and I didn't want to do either one of those. So first time we're going to be sitting here I'm guessing, I don't really know, I don't rehearse it, but I got a gut it's going to be well past 60. So let's begin. This is called charts, and it says a great summary of the bottom line to trading investing. I do want to read this little blurb here that was sent out with all the advertising for this event. I went through it all when I started. Probably, this is a quote from me, of course, probably like many of you, but early on in my career, I fully understood the truth about how you make money. It is a very hard topic to get across because of news shows and common perception, and also because of the difference between correlation and causation, something that we will talk about just very quickly on one slide. There are so many topics that surround the title of this presentation, it'd be impossible for me to review them all. Most every talk that I do touches on some of these in one way or another. Today's purpose may be to give kind of a bottom line conclusion or summary. A lot of these things are, virtually everything to some degree or another is touched on in a prior event. Tonight, though, is not going to be about rationalizing the things that I want to discuss. It's going to be about showing and proving you what works and what doesn't work. And as I went through this, I have to tell you, I'm almost tingly sitting here waiting to go through these slides because some of the things that I knew, but when I went to put the slides together, as I put them together, was blown away by how beautiful this is going to turn out. I also want to point out, so that I never disappoint, this is not about how to read a chart. This is about the results you can get of knowing how to read charts. So this is not in any way ever meant to substitute for the DTS seminar program, but it is meant to supplement it. And all of the students of the program, I insist that they watch all these presentations. And if you are just kind of learning on your own or just thinking about doing something in the future, a great spot to start off is to go to the DTS free stuff page and learn all you can there. And also gives you a chance to get to know me. If you don't know me, you may not like me. And while you're there, for some of you who visited occasionally, there was something added that I think is very helpful in the educational events section. There's a lot of stuff there, especially when you go to the archive page. So there's been a little table of contents, if you will, so that you can go through and read all the titles and see where to find it, okay? So what is the point of presentations like this? Is it just to be smart, to feel good about yourself, to have good dinner table talk, to be generally knowledgeable? I don't say that slide in jest. For a lot of people, that is what they focus on, either consciously or subconsciously. But that's not at all what you should be here for. If you're involved in this as a job to make money, and whether that's managing your long-term stuff, or whether you're stepping into day trade a little, make some extra income, it's a job, and you should treat it like a job. And we have one and only one job, and that is to make money. That should be it. And in the pursuit of making money, the answer to this question is whatever works is what I should be doing to make money, as long as it's legal. And by the way, the simpler the better. Do we all agree with that? That the goal here is to get to the bottom line of making money, right? Not feeling good about ourselves, not feeling rewarded, not feeling like we earned it, just simply making it. That's a problem for a lot of people. I'll explain that more later a little bit. Well, if you're on your own, though, what works is not always easy to determine. And sometimes that comes down to the difference between correlation and causation. And I don't want to get too deep into this because we're going to get almost immediately to some charts and proving to you what I'm talking about. But I do need you to understand that a lot of times people who have a hard time with that final step have it because of this thing that's the difference in correlation and causation. I just want to give you an example because they're big fancy words, but I want to give you an example of what it is. One kind of a silly one to make it obvious, and then the second one is not so silly because it's the trap a lot of people fall into. The next time the Chicago Bears win the Super Bowl, I'm going to go long the market because the last time they won, the market had a 15-year rally. They won in 1986 as in Chicago, and that was a fantastic year if you're in Chicago. William Perry, the whole crew, it was great. Does that make sense to you? It's true, it's a fact. Last time the Bears won the Super Bowl, the market had a 15-year rally. Well, naturally, you would say that's silly because there's nothing about the Bears that affects the stock market. There's no causation. It was just a coincidence, correlation, right? That's what we mean by that. But yet somebody who didn't understand the stock market or was told, hey, watch football games, may inadvertently think, wow, when the Bears win, the market's going to go up. So that's kind of a silly one. But here's a not so silly one. Fundamentals work because during the last Super Bowl market, not Super Bowl, I went long stocks with good fundamentals and I made a killing. Well, this one's not as easy because if you believe that fundamentals work, you feel they cause the stocks to move. But in a bull market, if everything moves up, wouldn't trading stocks that start with the letter B also work? Right? In other words, if everything's going up, you can justify it any way you want to. I could just pick stocks with the letter C, B, D, whatever, and whatever it was, if I believe that work, I'm going to believe and continue to believe it works because they went up, right? It's easy in a bull market. But the thing is, can you prove that the things you're looking at cause the stocks to move? I'm here to prove to you that they do not. And I might have some particularly ripe ears here tonight because I could say to you, if you've believed in some of these things, I'm going to make that big statement to you. How are they working for you now? Who says that all the time? I don't know. Somebody famous says that. How are they working for you now? How are those fundamentals working for you now? How is all this stuff working for you? See, it's easy when the market goes up for 10 years, it's easy. Because anything you believe in works. You can look at the zodiac solar system. There's a system for trading stocks based on the zodiac symbols. That probably worked too, as long as they had you long in a bull market. But all of a sudden, you're not in a bull market and things aren't quite as easy. They are easy. They're very easy if you know what you're doing. What works? Fundamentals, P ratios, brokers, analysts, downgrades, upgrades, automated trading systems, blah, blah, blah. I talk about a lot of these at other events. It's a great place to hear the discussion is when I do the Introduction to Techno Analysis course, the next one, July 29th. But that is not what tonight is about. Many of you probably heard that from me, and don't get disappointed. It's not where we're going with this, at least not directly where we're going with that. Tonight is about seeing it in action, not explaining the rationale. When I started, I got into the market on a whim. I just heard a commercial. I sold a business, had a little bit of money, not enough to, like anything close to retire, but had a chance to do something. Heard a commercial about, the stock market. Made sense to me. Stocks go up, they go down. Okay, makes sense to me. I thought I was smart enough and I set out to figure it out. So I read all the magazines, listened to all the TV shows, read all the info that I could find on the internet. And guess what I found out? There's a reason we're going right to some charts in the next slide, but there's a reason I have this slide here. Guess what I found out? Do you know what I found out? Do you personally know what I found out? You can guess. None of those things helped how to lose money. Why did you guys guess that is what the answer is? How did you guess that? And the answer I'm looking for probably is because that's me at the very beginning of my career, sorting through tons of magazines and looking at all the recommendations and finding out that at the end of the year, all the professionals couldn't pick a stock any better than I could with no experience at all. Because we've all been there. Exactly, Glenn. That's exactly the answer I wanted to hear. I read a lot of books, and this is one of the ones I remember. I don't remember learning anything from this book per se, like not about how to do anything. But what I remember specifically, this is a book, Nicholas Darvis. This is an older book. Anything I read is older. I haven't read books in a long time about the market. But it's Nicholas Darvis, How I Made $2 Million in the Stock Market. Anybody ever read that book? Yeah. And he got on the shelf. Yeah, it's on my shelf too. So I don't know what you thought of it. I mean, there's not a great learning thing from, but what I got out of it that I learned so much from was that everyone goes through what I did and what you guys did, right? It's the same process. You get in and you say, oh, listen to the analysts, listen to TV, look at fundamentals, look up this, look up that, and it's all crap. And I think it's important to understand that everybody goes through this. So it hit me very early on because I went out to kind of, just get right down and dirty and just, figure this out. And this is just, without any training. This is just me on my own. But it hit me very early on that everyone thinks the same. A lot of times I get comments when I'm teaching, even like events like this, just like a free event, and I'll get email comments all the time. It's like, Paul, do you know exactly what I'm thinking? It's like, how did you know? Were you looking at my screen today? And the only reason I know that is because I came to realize a long time ago, everybody thinks the same. And everyone does the same, and almost everyone loses. So what does that mean? If everyone thinks the same, does the same, and everyone loses, you have to think differently, right? You have to be a little different. So let's get started with something here. Smart people telling you what to do. Let's look at Micron technology. Specific example here. Smart people telling you what to do. Wait a minute, time out. Smart people. Sarcasm? Sort of. By smart people telling you what to do, I mean brokers, analysts, the talking heads. Talking heads means the news shows, the financial shows. Anyone talking common sense actually is in this too. Anyone talking common sense to me is in this category because common sense doesn't work very well in the market. Have you guys figured that out yet? Common sense is not a tool that you should try using on the market. Have you realized that already? Yes? Not even close to a tool you should use on the market. Many of the people, by the way, are smart. A lot of times I never pick out people individually, but I mean as a group, I will call people idiots, and I only say that because they're not doing people a service and they have other alternatives. But a lot of the people who you may see or hear from, some of them may be very smart. I'm not saying necessarily people are dumb, but they're not out to help you per se. They're out there to help their portfolio or their boss if they work for a news show. I'm talking about when you listen to TV and the guy comes on from the XYZ hedge fund and we're very bullish, and we recommend this stock, we own a lot of this and we're going to keep buying it. Well, oftentimes they literally are telling you to buy it so they can sell it. That's something that is, if you do it the right way, is allowed. So you have to be very careful what you listen to. And some people are just stupid. I hate to say it, but some people are just idiots. They get invited on shows for whatever reason because nobody else will come on, whatever it is. And some of them give really poor advice. And some of them give advice that's so poor they should be, you can fill in the blank however you want to there, right? So that's what I'm talking about by smart people telling you what to do. Here's some examples. Now, this is right from the press. I actually started this Monday, which I normally don't start that early because I was hyped about this when I started thinking about it. So this is right from a Yahoo page. I just snagged this yesterday or Monday, whatever it was. If you want to go there, here it is. If you want to, you don't need to, but if you want to go there, there it is. And what these are, I was curious, and I didn't look this up until Monday for this presentation. I'll refer to that some more later. But these are the upgrades and downgrades by all brokerage houses, whatever you call them, all firms, on Micron since December of last year. I want to go back to December. So you can see here if you look, actually it starts 11/23. Can you see the dates are okay? Can you read it okay? If you do want to ever blow up the screen, there's a little thing up on top like on YouTube, and you can expand to fill your whole screen with the slideshow here. So we go from 11/23 through, notice 12/21, everybody see this? 12/21 upgrade, 12/21 upgrade, 12/21 maintains buying, there's like 8 things on 12/21. You all see that? Yes, can you guys see that? Okay, it's very important that you see that, acknowledge it. I will show you more on a chart in just a minute. And then we go down here, 110, 111, 214 of this year, 316, 330. Okay, so those are all the upgrades and downgrades that happen. And this is what they had to say, upgrade, or some of these are maintain a buy. So in other words, they recently upgraded it and they're reaffirming. In other words, if they could upgrade it again, they would. In other words, they want you to buy so much of the stock that they ran out of the right wording. We already upgraded it and we wish we had a super upgrade button, but all we can do is say we're maintaining our super bullish outlook on the stock. So what I want to do now is I want to take these upgrades since last December and plot them on the Micron chart for you. So if you notice here, these are all the 12/21 upgrades. Now, if you can't quite read it, I can blow them up a little bit for you right there. You got them all? 12/21 upgrades. See them there? And these are all upgrade to buy or maintain a buy, right? Now, if you notice, the stock had gapped up this day. Now, why do you think there were so many upgrades this day? And I'm not sure. I don't know. I'm not sure if the upgrades caused the gap or if the gap caused the upgrades. But you know a cute little trick that's out there? And again, just so you know me, and I don't want to ever put on the wrong pretense. I've never worked at Wall Street, brokerage house. I've never done anything in the market before I started trading. So I've never been there. But through all these years, I've met a lot of people, got a lot of experience. And here's a funny little trick that can happen. You know, the brokerage houses, when they upgrade something, obviously they care a lot about their track record, right? If you upgrade a stock at the end of the year, they're going to say, well, you know, our upgrades were up blah, blah, blah percent. You would have made this much money, et cetera. So here's a cute little thing. If they upgrade this stock before the market opens, they get credit for this move. So it gapped up like $6 that day, right? So pre-market is trading at 86. And if they get on board and say, upgrade, upgrade, guess what? That $6 goes toward their performance. In other words, they get to include that in the amount the stock went up since their upgrade. Did everybody understand what I just said? I mean, if that isn't like a cheat, you know, what is? I mean, don't you wish you could do that buying the stock? Go back and buy it at 80 and get credit for the $6 just because you bought it before the market opened, right? So when you think about it, if this stock is going up because maybe one person upgraded and it gapped up, or maybe it just is going up because they said something good. But think about it if you're in the upgrade business, right? If your business is how can we impress people with our knowledge of upgrading and downgrade stocks, here you get a free 8%. 8%. Just by simply saying, click, yeah, I'll upgrade that thing, right? Yeah, exactly, Dave, right? So I just want you to understand, again, kind of the motivation, the big boys, how they're helping you so much, and yet there we are, what they're really doing is saying free 8%. If somebody gave you a free 8%, you'd probably just take it, right? Hey, the stock's been going up forever. What's the harm? Let's do it. So there we go. So everybody upgrades the stock. Now, you can see the way I capture the chart. I have this blanked out, but you can see, hey Carmen, you can see there's not a lot of room, right, to go much higher. So you kind of know what's going to happen here already, don't you? So here we go. And by the way, this came from 65-ish. So here's another two more upgrades, two main maintains. Goldman Sachs, I've heard of them. They're kind of a big place. And New Street Research, I've never heard of them, but they're very active in these upgrade things. They both, you know, reaffirm their buys right here. Now, I want you to understand, it's at 95. It came from 65, all right? So from 65 to 95, right, things were just okay. And now that we're at 95, now everybody feels it's appropriate to upgrade this stock. Nice, like it. That away, guys, thumbs up. So then we go on. So here's the one upgrade. I just put dots there. Here's another upgrade. Here's another dot. And now here we fall a little bit and we come back. And these guys are thinking, well, boy, you know, I was underwater almost immediately after upgrading it, but no problem. Here we come back, and here comes an upgrade from Wedbush. Neutral to outperform. MU is going to now outperform. And we go on. Whoops, a little slip there. Bernstein, market perform to outperform. Nice job, Bernstein. Way to get your hands in the pie there, too. On this gap up day, look at here. Look at these guys. They really got caught. Up, big gap up day. See that gap up, the top of that red bar? All right. So let's reaffirm our buys, right? Maintains equal, well, it maintains equal weight. I guess that's kind of a neutral one. Reaffirms a buy, and oops, boy, that gap up didn't work so good that day. They got their free percentage, but they lost it by the end of the day. And then now Citigroup, all of a sudden to neutral. Well, I guess that's one of the best. And here's the smartest guy in the street. He downgraded it here. It fallen from 95 to 75, but at least he downgraded. But wait a minute. Down here, USB maintains a buy down here at 60. And by the way, here's Summit Insight Group finally downgrades this at 60. Now, you may have recognized this name, Summit Insights Group. Does that sound familiar to you? Remember Summit? Because back on the first slide, see them right there? They upgraded it right there. So notice Summit Insight. Upgrade to here, upgraded here, and then downgraded here. But you know what? At least they downgrade. So they recommend to buy at 88.99, and now they recommend to sell at 60.22, minus 32%. But at least they finally said solid. That's better than some do, right? That's better than some do. Now, if you're just following recommendations, well, didn't do so well through this period of time. But why not follow the recommendations, right? The news out there about chips and Micron is nothing but phenomenal. Now, the reason I first turned to Micron was because, well, you'll see in a minute, I'm involved in Micron, but I had two different people, as well as a couple stray emails asking me, because you'll see in a minute, I have this as a short position, asking me about shorting chips because all the news, chips, shortage of chips, chips are in demand. We all need chips. Chips are on the rise. Do 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 do. Micron is riding these three massive trends. This is on March. Demand for data centers, mobile 5G, all these reasons why things are going higher. Next commuter memory and data storage specialist will send blah, 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 blah. Recently, I know, blah, all nothing but great, phenomenal stories. You can read them all. Go Google chips or Google Micron over the last 6 months. You can read all the great stories. Nothing but beautiful, beautiful stories. I challenge you to find a negative story out there. Unless it's from some bozo who just says boo-hoo to everything, right? By the way, this next slide has nothing to do with the presentation. I just thought it was funny. A couple of those blurbs came from a summary on Motley Fool. And while I was reading that, I'm just on the free spot because I don't think I've ever been there. You're reading a free article with opinions that may differ from the Motley Fool premium investing services. I was like, really? So they have a free section and that says one thing, but then if you pay, you get a different section with real information. I ought to do that at DTS. I thought that'd be kind of funny. Here's your free section. It's all wrong, but if you want to pay for the real information, that's fine too. Anyway, so I had nothing to do with it. So why pick on MU? Why did I went through that? First of all, are some of you shocked and amazed? Yes, at what I just showed you? A whole string of upgrades through the whole time the stock is falling, including upgrading the stock at the high. It goes from 65 to 95, it gets upgraded, and then it falls all the way back to 65 again. Now, I didn't search for MU. I didn't search all the stocks and do all this research to find the one. You're going to find this all over the place, right? But there's a reason I went to Micron specifically, and that is because I have Micron short. Most of you probably know that I put out long-term positions in a long-term trader newsletter. And on January 13th, the long-term trader issued a short on Micron. Short under 95.05, stop over 98.25, target blah, 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 strategy blah, 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 who cares? So if we go back to the chart, there's my short on MU. Now the chart may look familiar to you because it's the same chart we saw when we were looking at the upgrades. There's one of the upgrades, right? Let me go back and forth. Upgrade by Goldman Sachs. I've heard of Goldman Sachs. I think they're good. DTS short. Goldman Sachs upgrade, DTS short. Now, did I know that? Of course not. I don't look at this crap. I never look at this crap. I didn't know this until I went to this presentation together. But what I thought was, I've been short MU, been in a great position, still got a third of it. And I know there's all these bullish articles. And if you listen to the financial news, it's all bullish on chips, bullish on chips. So I'm thinking, I wonder, besides the news, I just went to look for news articles originally, and then I immediately came across that list of upgrades on the Yahoo site. I was like, wow, there's been almost nothing but upgrades for the last 4 or 5 months. So I thought that would make just a fantastic concept. So there we go. So for MU, short there. And then we hit an unusually quick target. Now this is a longer term position. I still have a third, so that's 5 months ago. Not necessarily years on the short side, but I like to get in there months. And you may say, why take, and this has nothing to do with tonight per se, but just a little educational sidebar. Why would you take 1/3 target right there? Anybody tell me some reasons why? There's 3 good reasons why. It's a quick drop. Yeah, it's kind of the free money concept. That would be the 4th reason, actually. Right, Scotty. It actually was this kind of little prior low minor support area. So the way I look at it sometimes is that if it's going to be the wrong position, if it's going to fail, that'll be the low. Number 2, Christina, because of this incredible entry up here, look where I shorted this. That was over 4 risk units. It's like 4.5. I don't know what you think about risk reward, but that's a pretty good return for a few days. And here's the real reason that nobody's probably mentioned yet. Anybody know the biggest reason to me? And I would call it one of my personal favorite concepts of management. I'm going to share it with you here. Those of you that take seminars with me know this already. Yeah, I'm going to spill some of it to the group here, but I mean, technically it's kind of that gap fill area, so it makes some sense. But here's the biggest one. Exactly. Who said that? Hey, Myrnis. Exactly. So now I can forget about it. Right. Because Look, I just made 4 hours on a third. I don't care about it anymore. I don't touch it. I don't look at it. Original stop from back here. Whatever happens, happens. Now, what if I didn't take the third? Guess what? You'd probably be getting all jittery up here, right? And anybody know this feeling? You had a full position, you're up some money, now it's going back to zero. You get jittery, and maybe these topping tails right here, maybe you lowered your stop, and then you get taken out, and then you have what is now a 17R trade that you get nothing from. That is what you have to look out for. Stopping out of trades is not a big deal. That's just going to happen to you. But not managing good winners will put you out of business. So there's kind of the summary of where it is. Target 1, and then hold on for the big move. Target 2 was frustrating. I got nicked out of it right here. The reason was simply just so you understand the whole process here. Held the low so many times. The market had the potential to make a pop there, and I figured target 2, take that money, and then 3 days later it rolled over. So naturally, I wish I could have just kept it there. But third part of it's still open way down here, up 17 hours. The second one is 10, and I just ran the number real quick. It's about 17 on the third one there. So where are we with this? The point of this is just this, is that charts rule. Charts rule. If you at all think about fundamentals, read articles, whatever it is, I have to ask you, after seeing that, why would you do that? See, there's this correlation factor, right? That during the bull market, things are up more than they're down, and people can just say blah, 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 and everything's going up, and you can say chips are good because we need them in cars, chips are good because they taste good with salt on them. It doesn't matter, right? But when things aren't as simple, all of a sudden it matters a lot. Charts let me do that. Do you think I could have done that reading any of those articles? Do you think I could have done that from listening to any brokerage firm? What do you think? Can't do that. And if there was ever, and this is why I love tonight, Mark, because there's ever a night for people who are even on the fence. How can you sit in denial anymore, right? It's just charts. And it's wrong to think of it as a choice between technical analysis, which is charts, and everything else. Charts are the final synthesis of everything else when you know how to read them. Think about what a great line that is there, and maybe that helps you. There is no other way. And I want to emphasize also, if I felt anything else worked, I mean, in case you think I have some weird motivation to only want to use charts, I don't. Yes, I teach a seminar program, but you know what? If I felt it helped, and you know what, it would probably help to sell classes for me to say, I'm going to incorporate the DTS fundamental point system, and I'm going to come up with a point system for fundamentals, and we're going to screen stocks and blah, 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 blah. And some people out there would probably like that, but those people would be wrong, and it would be a waste of time, and it would not make me one additional penny. Does everybody understand what I just said? There is no reason I wouldn't use this stuff if it worked at all, because I just want to make money. Do you guys understand that? Seriously. There's just no other motivation other than this crap doesn't work. The other crap. Another great slide coming up. And this is the other thing I want you to think about that makes it so difficult to learn the market, because it is the ultimate case for this in politics in general, confirmation bias. Once a person has a belief, there's a huge human tendency to only absorb the information they see, read, or hear that confirms what they believe. I'm sure most of you are kind of aware of this. Likewise, once a person has a belief, there is a huge human tendency to ignore the information they see, read, or hear that negates what they believe, right? So if you think listening to anchor blah, blah, blah on the financial news, or reading this update, upgrade, or downgrade, or whatever, if you think that's going to help you, you tend to see all of the upgrades that work and say, wow, this is great. And then the ones that don't, you just kind of pass them off as saying, well, you can't get them all right. But if you really do an actual analysis of the causation of what's going on, you'll find they just don't work, period. And I found this out in my first couple months trading, because I went and I just literally, I didn't want to believe anybody else. So I just took everybody's upgrades and downgrades. I charted them for 6 months. I found out they're all crap. Nobody knows a thing. At least the people that are paid to talk to you. Let's talk about another one. Netflix. We'll play a little game here with this one. Now, I have no position in Netflix, okay? This one is just hysterical, though. I couldn't not show it to you, right? Goldman Sachs downgrades Netflix. I want you to take a guess when. When do they downgrade Netflix? Here, big red bar comes into an extended pattern. Downgrade it there? No, you'd be wrong if you think it was there. How about here? Certainly we're getting in that area where they're going to downgrade Netflix, right? Nope, not yet, not yet. There we go. Roger, you think right here? Time for a downgrade from Goldman Sachs. Goldman Sachs, by the way, pretty big place. I understand they're pretty smart over there. Time to downgrade yet? How do you say your name? Exxon? Exxon? Zone? I'm going to call you Zone. I'm going to make the X a Z because sometimes X is Z, so I'm just going to call you Zone. Not yet? Here? No? Nope, not yet? Zone, got it, okay. Well, here, now things are falling apart. Look at this. Oh, wait a minute. You know what, though? I just realized something. I'm thinking like on a technical basis, this is getting kind of bad, right? But wait a minute. We're on fundamentals. You know what just happened to this stock? Dave, you know what just happened to this stock? Its PE just went down. It just went from 700 to 350. Its PE just got cut in half. Exactly, Mark. Yeah. And if we recommended at 700 to buy it, you're going to love it at 350, right? Yeah. Here, nope, still not time to downgrade. Oh, well, now it's almost not even worth downgrading, right? But still, no, still not ready to downgrade it yet, right? There's the downgrade, guys, right there. From 700 plus to 182. And now it's time to downgrade it. How does that help you? I'm not making this stuff up. I'm not picking on, you can look around almost anywhere and find this all over the place. Well, they had good reason, though, to downgrade it, folks. Thank you, Goldman Sachs. They had good reason, though. Netflix shares slide as Goldman downgrades on there's a grim economic picture. Well, now I understand why we're downgrading these, right? Goldman downgrades Netflix to sell on recession risk. Oh my gosh. Well, a recession's coming, folks. Did you know that? We better start selling stocks like Netflix that we've owned from 700 and start selling them here at 170. What a great idea. Oh, competition. Goldman Sachs, I got to hand it to them. They have a team of people there. They found out that Netflix is competition, and they reacted properly by downgrading the stock. You know what we got here? Goldman Sachs, I had a hard time finding this out, so this is from 5 years ago. 1,900 full-time analysts. 1,900 full-time analysts on staff, and that was 5 years ago. It goes up every year, and I couldn't even find recent numbers for that. 1,900 full-time analysts, and Netflix, the second largest media company in the world, right? And this is the best they can do. 1,900 analysts, the second biggest media company in the world, and they downgrade at 170 afterwards at 700. All that brain power gets you this. Does anybody smell something wrong with this? Does anybody feel that this is beyond stupidity, that this has to be evil in some way, somehow? It doesn't matter what it is. The point is that we only have one defense to understanding this, and that is to see what is actually happening. What is actually happening? Not what people are saying is happening, but what is actually happening. And people that know how to read a chart understand where Netflix should have been downgraded. 1, 2, 3 times before it even got a fourth of the way there, right? Yeah, well, yeah, I guess maybe they were waiting for the gap down, Dave. That's why they waited for 3 months and they never got it, so they just gave up and said, fine, we'll downgrade. So there's the Netflix story. You know how you can beat that? You know how you don't have to wait to 700 for a 700 stock to go to 170 to get out of it? Is understand technical analysis. Anybody who's gone through class could look back at that chart and understand where to get out if you're in it. And if you're looking for a short, you may say, like for some of these, well, Paul, why didn't you short that one? Well, 600 stocks drop. There's only so much you can do. So I try and find the shorts I like. If somebody at the right time would have pulled up Netflix and said, hey, yeah, there's a decent short right there. But every moment or every day, you're not looking for a short, so you don't always find them a short. But if you're in this, it means you're intimately involved and you have to understand where to get out. And that's the other half of the coin here, right? Stocks are the conclusion. Charts are the conclusion. They are the truth of all the other information. It is the synthesis. It is common for firms to recommend stocks as buys because they want to sell them. Buffett does it all the time, Warren Buffett. Look at the language of charts, the battle of the bulls and bears across multiple time frames. It's the old cliche, charts don't lie, and they don't. Charts don't. Here's another one, and again, the whole point of tonight is just to clearly and convincingly tell you that you can make money when you know how to read a chart, period. That's just simply it. And there is nothing else that takes that place. And there is no such thing as confirming this, confirming that. There's no such thing as using fundamentals to find your watch list and then using technicals to find timing. That's all crap. Charts are where you find everything. Most people don't have a clue how to read a chart. It's something that I teach, several people here have taken from me. It's very doable. Now I want to show you a personal thing. And again, the point of this is one and only one point, is how can you not do this without charts? June 2nd, this is a couple, 3 weeks ago. And I was actually going to do a separate educational article about this, never got it out. So I figured, hey, I'm going to throw it in tonight because it kind of lines up with what I'm talking about. June 2nd, even though we've been in a bear market, was a very bullish day, right? Take a look at this day. June 2nd, very bullish day. We moved up, we pulled back, we flew higher. The rest of the day was bullish the whole day. I had a good trading day. I made almost double the goal. Yeah, but this is pretty advanced stuff if I even think I understand your entry here. Reg, it's not really advanced stuff. It's just understanding. I mean, it's really not advanced. When you say advanced, I've been ignoring some of your questions about that are just technical things on the last chart about what you would do to stop it. I just can't go there tonight. But here's one that involves tonight a little bit. Right. I mean, it understands a full understanding. Because when you say advanced stuff, I mean, anything you need to read charts, which I'm going to emphasize later a little bit. And again, I always have to preface this with, I don't want it to sound insulting to anybody, but you only need the intelligence of a fifth grader to understand this stuff, right? It's not like it's high tech or anything, but it does require you, just like anything you're going to learn, whatever it is, you have to learn all the details and you have to learn it properly. And most people don't. Well, Reg, you're just not going to be qualified then. All right, so where was I here? So I had a great day, almost double the goal. Does anybody know what the next slide is going to say? Anybody take a guess what the next slide is going to say? Had a good day. There's the chart of the market. That's the, oh, I'm sorry. You know what, man? I goofed. That's MU. That's supposed to be the QQQ. The QQQ is very similar that day. MU and the QQQ track very similarly. The market was just like that. Darn, how did I do that? What's the next slide going to say? Had a great day. Day trading. This is day trading. Made almost twice the goal. Exactly, Eric. Right. I was all short. All short. The last trade made peanuts long, but everything else was short. Now, a couple of shorts lost, right? A couple of the shorts lost. But I made money short. Now, you may say, well, Paul, why are you bragging about that? Why is that something to brag about? It sounds pretty stupid to me. Well, listen carefully. It was not my intent to do this, right? I felt it was going to be a bearish day. If you look at the market, you can see that we gapped down, and I thought it was going to be a bearish day. It was kind of like today. I thought it was going to be a bearish day. I was wrong. And if I was trading the market, I would have lost. I maybe would have lost a lot that day under the philosophy that I have, that it's okay to lose money, and it's okay to lose even more than you're comfortable with when you have a strong conviction about what you're doing. But it is a sin to lose money when you're trading, when you're clueless. Everybody get that one? So I had strong conviction that day. And if I was trading the market, I would have just lost, right? Nothing to say about it. But trading is about odds. And one of the things I do to increase my odds is use the market as a bias and trade stocks that have unique patterns. Sometimes I trade the market when it's just clear and convincing, but most of the time, so I have this bearish bias and I traded stocks, and guess what? The stocks with unique patterns end up on balance paying out. Actually, I was up quite a bit and then I gave some back. So how do you do that? What else could you attribute that to other than a pure understanding of charts, right? Do you get my point here, though? It's a little subtle, but do you get my point, everybody? If it's not 100% charts that matter, how can you take a bullish day and make money short? It's just finding those moments in time, those patterns. And guess what? If the market was with me, it would have been even a nicer day. Now, don't get me wrong. I don't necessarily do this every day. Full disclosure, it's kind of a similar day today. I had a losing day today. I had no problem with it. Wasn't the way I thought things were going to go. I just quit early, lost a little bit, was done, no big deal. Didn't want to come back to the plate really. I did come back for one long trade that made peanuts, but you know, majority of the time though, this is what helps get me my odds, and it's from just understanding how to read a chart. The only thing that matters in making money. So I picked stocks that made money regardless of the bias. How else could you possibly do that? Only by understanding charts. You know what? Charts rule. Do I have to go through this slide again? Let's go to the next one here. I have something I have to read, I think, before I say this. I don't ever pick on anyone. You guys have never heard me pick on a person. When I talk about news people in general, whatever it is, and I don't like doing that. I talk about groups of people, whether they be brokers or the talking heads, whatever it is. But I make an exception in this case because I think the way I think is you either have to be right, you either have to be really good, or you have to be humble, one or the other, right? You can't be wrong and then be arrogant, right? Yeah, you like my little thing up here? Because when I first Googled him for the picture, I spelled his name with a K. So we're not talking about this Kramer, not from Seinfeld. We're talking about this Kramer. What I do want to give him credit for, there he is, hey Cosmo. What I do want to give him credit for is if you want someone who knows fundamentals, the textbook kind, no one is better than Jim Cramer, the host of Mad Money. He probably knows the birthdays of the CEOs of every Fortune 500 company. He knows everything. He talks to people. He's the smartest fundamental guy you'd ever want to know. So he's had the show for, I don't know how long, God, a decade, 2 decades, 15 years. I don't know how long he's had the show, forever. But if you look it up, it's not hard to find it. His track record is, well, it depends who's tracking it, but his track record varies from losing money to breaking even, being only bullish in a bullish market. And this is a funny article, I thought, that when I was looking for some information on this, and you can Google this yourself and find, his track record got too difficult for me to try and figure out because there's a zillion of them, but exploitable knack for being wrong in a big way. An inverse Kramer ETF. I'm not really sure if they're serious or not about this, but this is hysterical to me. An inverse Kramer ETF. In other words, a fund you would buy that takes the opposite of Kramer's trades. So you can read that if you want to, but I just thought it was kind of hysterical. But again, think about this. This is the smartest guy in the world about fundamentals, right? This is the smartest guy in the world about fundamentals. And what good does it do you? Well, absolutely nothing, right? Absolutely nothing. You can Google his track record. There's a range out there, but at best, he's at break even. And that's being only long. He's the guy that says there's always a bull market somewhere. In the most bullish market ever for 10 years. I mean, you have to almost try, don't you? And again, I haven't listened to his show in forever. I mean, maybe I'm scanning channels 6 months ago and I stopped for 5 seconds on him and turned him off. But I mean, so I don't know what he does that much. I just know his name. But here's the reason I'm willing to put him up here and say this is kind of a bad guy. Because for whatever sake he's doing this, whether it's the profits for the show or whatever it is, he says things that he almost like should go to jail for, in my point of view. There was a lady back a long time ago when I don't think I ever heard the show, but somebody sent me a clip because they couldn't believe this. And what happened is a lady called in and she said, "Oh, hi Jim, love your show. You know, you recommended this stock XYZ, I don't know what it was, like 6 months ago. And I bought a bunch of it. And I bought a real lot of it. And I'm down like 50%. Do you understand this, first of all, right? Some poor lady, on his recommendation, bought a lot of some stock, and she's down 50%, right? Now, why would you ever be down 50? Well, that's because he never says to sell anything, basically, unless he rates it a sell. But you just hang on forever and hope it comes back someday. So you know what his answer was? His answer to her was, and her question was, and by the way, she was not mad at him. This is the amazing thing. She was not mad at all. She was just saying, I'm down 50%. What do you think I should do? And here's what he said, and I can still do his voice because it's nauseating. He said, what you do is you take that stock, you pull out the fundamentals, you kick the tires a little bit, and if it looks good, you buy more. That's what he said. Obviously, it's not the way you do things, but I'm just trying to fill out the full gambit here, of you're on your own out there, folks. If you want to make money in the market, you're on your own, and there's a way to learn it. Is this the final slide? You know what? I said we're going to be 90 minutes. I can't believe that I guess I was just being diligent. Well, we're not done yet, but what is trading? So what I tried to do was go through and give you, and I always feel I did a great job, but maybe I didn't communicate well. But I felt I did a great job, what I would call simply proving that there is no other avenue out there to make money other than understanding charts, because charts do not contradict other things. They are the synthesis of everything else. And they are what's actually happening. You can see somebody can recommend you to buy a stock at 95 and it falls to 65. And how do you reconcile that if you don't understand charts? You don't. You just lose money all the time. Now, I know you can go find recommendations that work, of course. And here's how the industry survives. Do you know how they survive, everybody? Here's how they survive. We're in a bull market, I don't know the exact stat, but 90% of the time, right? And prices over the long haul go up more than they go down. So people who are smart, people in the news, people who are analysts, people who are brokers, it's just a perma bull mentality. Things are always going up. And you know what? They end up being right most of the time. And when they're wrong, they end up being right at a later date. They can brag about being right. But then when things fall apart for a period of time, like 1999, 2008, and right now, they can sit back, you know what they can say? What do they say? That keeps them in business, because they've been doing this for a century. When did TV come out? No, it's not even for the long term. Well, it gets hard to say hang in for, they will say that. But, you know, the last one took 19 years to recover from. No, what they will say is basically, hey, you know what? This was not our fault. This was not predictable. You know, that real estate crisis of 2008, you know, that was nothing that anybody could have foreseen. And every time we crash, it's nobody could have foreseen that. But you know what? People who read charts always foresee it, right? But Wall Street doesn't. But they don't care, because it's 10% of the time. People get wiped out. They don't care. And then we start all over again. And then you hit a bottom, and then it's all back to being bullish again, right? Yeah, right, Jim. Yeah, that's what they write it off as. It's like the market's always up, but how could anybody have foreseen that we're going to have blah, blah, blah happen, right? Now, there's only one time that there was a true, well, there have been two times in my lifetime that there have been a true shock value event that was unpredictable. And that was 9/11 and COVID. Those were true, unpredictable type of things. Everything else was not. 1999, 2000, 2008, all those were extremely predictable. I was here for them, and I was short at the top. It's only the shock value news. If an atomic bomb goes off over Washington, D.C. this afternoon, the market will drop, and nobody could have predicted that. Okay? But other than shock value events, and there was only the one before COVID, it was just the 9/11 event. But all the rest are not. They're just very predictable. It's just that it's not worth it for people in the business to try and even figure it out. It's just stay bullish, and that's what people want to hear, right? That's what people want to hear also, right? That's all they want to hear. So what is trading, though? I know we look at charts and that kind of stuff, but what information do we need? And I've alluded to this at the end of every time I do that Introduction to Mastering Technical Analysis class. And I want to make it very clear. Trading is, in every essence, is and should be exactly like playing a video game. Now, why is that so? Well, think about this a minute. In a video game, you're dealing with the screen in front of you, and that is it. Whatever the game you're playing, all the players that are there are with you, and that's all that matters, is the actions that they take. This is exactly what it is to understand the language of charts. Keep things simple. To win a video game, you must be pretty good. You must understand the game, how it works, and what to do when the other players take action, right? Why is this so tough to accept? Why is it so tough for people to accept that you can fairly quickly learn how to read charts, work very short hours, and make money from this? Well, for one, people want to feel justified to earn their victories. To get in, to roll up your sleeves and do the research, do the work. That's what we were taught, and it's true for much of life. It's true for how many of us were brought up. It's not true for trading. Do most of you agree with that and feel that way to some extent? I remember feeling that way, feeling kind of guilty making money. Do some of you feel that way? That you're supposed to get in there and justify what you're doing, right? Yeah, we want to feel like we earned what we did. And we want to feel that I'm making money on a stock long because this is a great company and they make good stuff. And forget all that crap. You are supposed to make money in your account, right? And I don't care if you're shorting potato chips or going long Goodyear tires. It doesn't matter. Even when I take a long-term position, do you know that most of the time, well, a lot of the stocks I know at this point, but I recently had a position, I didn't even know the name of the stock, to be honest with you. All I look at is to make sure I'm not taking home like a biotech or something. and I probably looked at it, but I don't care. It's the chart. The chart says everything. What am I going to learn by saying, oh, they make hot air balloons? What do I learn by doing that? Other than the fact that, I mean, there is a sector analysis concept, et cetera. There's some things, but I mean, just generally speaking, it's not in any way helping you understand more about the stock. It's hard for people to accept that, though. It's hard for people to just look at a chart and say, oh, because you feel like you're playing a video game. It doesn't feel like you're really earning your money. People justify other action through correlation, not causation. So I already referred to this, but they then drop back to say, well, you know what? Over the last few months, I've noticed if I look at these charts and I check the PE ratios and blah, blah, blah. Yes, in a bull market, everything goes up. And if you look for a reason to be long in a bull market, you're going to justify it because you'll find some reason to be long. It doesn't mean that's what's making the stock go up. And if you've ever doubted that before, look around now. How are all these methods working for you now, the last 4 months? People that read charts, me, we're having a great time. Hey, who's out there? Who's out there that gets the long-term letters in the trading with me? Are we having a great time? Yay or nay? Not a paid endorsement, but I'm just, for those of you that are new, I'm not just making this up. We make money up, down, doesn't matter. Sure, have a losing trade in the letter, have a losing day in the room, but over the long haul, we're killing it. Why not do what you need to for preparation for the video game, which is not a lot, meaning prepare for the trading day when you are doing technical analysis. There's not a tremendous amount needed. Spend the rest of your time doing things that matter to you, right? Who's somebody like in the room? Who's somebody in the room that's like independent for the most part? Like, I'll take a shot here. How much time do you guys spend preparing for trading the next day? This is for day trading, just for day trading the next day. It doesn't take much time at all for long term. I mean, that's like a couple hours a week, but how much time do you spend getting ready? Hour and a half. Okay, that's a good answer. Yeah, all right. Half an hour, Roger. Okay, right. So for those of you, I'm just trying to point for the people who aren't that familiar with trading, that's what the slide is saying here, is that why not take half hour to an hour and a half to prepare, trade the market a couple hours, and then do what you want to do. And if you want to listen to the news and stuff, because I do listen to news, but it's just for my own personal life, not for anything having to do with trading. When you're new, it's tough to separate that. It can be very difficult sometimes to separate what you hear personally from what you are doing on a chart. After listening to this, how can you possibly think of looking up news, earnings fundamentals that'll help you in your quest to make money? Learning charts is not hard. It takes a little time and discipline. I love this presentation tonight. I can't believe I did it in 65 minutes. I really felt it was going to be longer. I'm going to make a push I don't normally do, and that is to say that if you are really intrigued by learning this, get involved in the DTS seminar program. I like to say sometimes that, you know, I don't know how to phrase it properly, but I'm not going to be around forever. I don't mean life-wise, I mean teaching. I'm not going to be teaching forever. And if you're ready, get in and learn. There's just 100% positive comments from everything. People learn. On one hand, it's very expensive. On the other hand, it's what I would consider to be very, very inexpensive. And there is a full-blown home study program now that was released last year, so there's no excuse anymore. Thanks, Eric. A couple of things. If you're talking about learning, there is now a home study program, so you can listen to my 3 seminar course days over and over and over again, all you want to. And there's additional information in the program. And if you're talking about actually day trading, you don't need to be fast. I just recently put out a presentation on the free stuff page, and it was called Tips on Day Trading. As a matter of fact, let me give you the link right to it. And a lot of that, what I really talked about was the fact that you don't need to be fast to day trade. You need to be organized for 99% of what I'm talking about. And anybody who wants to read this here, this will take you right to it on the free stuff page. So let me pause here and ask you guys if you have any questions from anything I went over tonight. For those of you that are intrigued and want to kick the tires a while, hit the free stuff page there. What can I answer for you guys about anything at all? I hope you enjoyed tonight. I really enjoyed it. Speaking seriously, okay. Well, then what I said, whether you're talking about learning or actually day trading, there is and also just to give you another clue, Zone and whoever else, there is what I call a 100-day seminar program schedule that is available to seminar programmers, but this is also available to anybody. And it just gives you kind of a rough view of what I feel you need to do. And this would be somebody who's maybe not full-time, but, you know, can devote some serious time every day, a couple hours, whatever. It kind of walks you through how you would go through it in 100 days. and you're learning a skill. It's not something where it's like you learn some crazy method and you're making money the next day. It's a skill you learn. Well, Zone, because you've never learned. You're listening to me give you examples, right? Showing you the final result of what happens. And you're trying to duplicate that without knowing what to do, right? Okay, but that, I mean, that was a decade and a half ago, and I don't know what you learned back then. There is, a fair amount to learn, but you can't, and this is one of the downfalls to me about what I have on the free stuff page, putting the trade of the week videos out there. I decided to do that, but a lot of people look at them, there's the final result, and they try and duplicate it to reverse engineer, and it doesn't work well. So I think a lot of people fail, but hopefully they're going about it in a smart way in paper trading and come to realize that it's hard to duplicate. It would be like, it'd be like me looking at somebody painting a painting or something, and I just look at them and go to paint. I mean, I don't know how to paint. I can't paint. I can't look at somebody paint and learn how to do it. You have to be taught sometimes how to do something, not just see the end result and expect to duplicate it, right? Questions, anybody? Right, well, that's another good example, Zone. I mean, if you want to learn how to play the guitar and you just watch somebody play the guitar, you're not going to pick it up, right? You're just seeing the end result, and that's what a lot of this is. You're seeing the end. You're seeing the end. You're seeing the MU trade. Oh wow, he shorted there and he covered there. Wow, I can do that, but how? You don't understand at all how I go about getting to that entry, right? So it's not something that's taught in 10 minutes. It's a process to understand everything about the chart from the big time frame down to small time frame and the multiple time frame coordination and what we mean by secondary signs of strength and weakness versus an entry and entry versus a strategy. I don't want to make it complicated, but it's obviously not that simple that you can just read a 2-paragraph sentence and understand it. But no different than anything else you would learn. Well, Mark, I mean, there are places that charge $25,000 and more. And that is justified because, as I always say, they fill in a lot of extra material. Instead of getting X number of hours, you get 5 times that amount of time. So they fill it in with a bunch of crap that not only is not necessary, but then confuses you. But that way you can say you have all this time. See, we're streamlined here. After all this time, I know exactly what to teach, what matters, what doesn't matter, and that's what you end up getting taught here. So it's streamlined. It's something you can digest in a reasonable period of time, and I think as directly as humanly possible, be able to apply it, right? All right, we're going to call it a night then. All right, see you guys. Have a great rest of the evening. See you guys in the trading room tomorrow. Those in the trading room, have a great night.